Hey guys, so in this video we will be discussing about entries and exit. Okay, so for an entry, okay, so till today or till this video we have learned about using the previous video we have learned about first is identifying the structure. Okay, identifying the current structure. Okay, what is current structure? And then second part we have learned about breakout structure. Okay, and so we know how the structure is going to change or what is the next structure that is going to be. In the third video, we have learned about order blocks and how to mark our POI. Okay, so in this video, we will be discussing about entries, okay, and exit in the last. And in entry, what will happen is the market returns to our POI. Okay, so let's take an video. Having upfront or breakout section and also another breakout. Okay, my order block would be somewhere around this impulsive move structure. Okay, so this is the trend is uptrend, and then here we get a breakout structure which will confirm that a downtrend is going to happen. Breakout structure and another breakout structure confirms that a downtrend is going to happen. Now before the downtrend is going to happen, so the market must come again to these levels in order to take the remaining quantity of orders so that it can actually go down. Okay, so what happens is that the market will come back to our you know POI very slowly, and then we can actually see an impulsive move. Okay, so but before that, how can we enter? Okay, so sometimes we can actually put a limit order around here. Stop loss will always be below the POI. Okay, in case of uptrend, sorry, in case of short positions, the stop loss will be above POI, and in case of long positions, the stop loss will be below the POI. Okay, so the first method is to take an take a place a limit order, and the stop loss limit order will be more good. Then our target exit will be dealing later. Okay, so for an entry, how can we actually confirm this entry? Okay, so for confirmation, you can actually, first thing which I do is I look for candle reactions. Okay, so by candle reactions I mean like engulfing candle. Okay, so here we will get an engulfing candle. If we get an engulfing candle in the downside, we'll be entering, and also if we have a pin bar sort of candle, we will be entering. Okay, whatever the rejection type of candles, maybe a pin bar candle, morning star, something like that, I will be having an entry. Okay, so that's one type of entry. Another type of entry is to go in lower time frame. Okay, so if I take this whenever the market touch here, they actually went to a lower time frame. Okay, so the lower time frame scenario I'm actually drawing here. Okay, draw the POI, and in a lower time frame I can do forming like this touches or POI or maybe near POI, then breaks a small structure. Okay, for this small structure, I actually mark it as my minor breakout structure. Okay, meaning minor, it's just minor. Okay, when compared to the breakout structure, minor breakout structure, and then I will be having a new POI. Okay, now I'll be waiting for the market to reach this new POI, then I will be taking entry. Okay, so let me go to the chart to explain it more a little bit. So in the previous video we have learned about this uh, breakout structure and also the POI. So we have drawn our POI here. Okay, using this candle. So let me just use the reply to. Okay, so this candle will be our POI. Then market, okay, it touched our POI. Okay, Now, do I see any candle reactions? No, but I do see a lot of wick here and there, which is not going to confirm at all. But we can actually move on to a lower time frame, maybe 1 hour. Okay. So I went to lower time frame and waited for a minor breakout structure. So do we have any minor breakout structure around here? Yes, there is breakout structure. So, but there are a lot of gap and all. Okay, so here if you are considering this wick, then this will be our breakout structure, and that's our breakout structure. This candle will be our POI. Okay, no POI, refined POI. Wait a little bit. Okay, so that POI actually got violated, but that's not a problem. Okay, because for us the POI, the only POI, okay, so the larger POI is this. Okay, so these things can happen. Okay, minor POI can break and all. So let's still wait and then okay. But here actually you can see that there's wick reactions. Okay, here you can see a wick, larger wick pin bar candle, which indicates buying pressure kicking in. Again it broke wick. Okay, so here is one good breakout structure. Okay, so maybe marking this will be our potential, will give our potential entry. So if I mark this as our breakout structure or a minor breakout structure, my POI would be around this candle. Okay, so here I mark two of these candles. It depends. Okay, so since I teach only this one candle, I'm gonna mark this only. Then let's, yes, it touched, and then touched again. Okay, then it fight. I think it fight, but let's see. So we have over 4 to 5 touches on this candle. And why, you might say, because this is an impulsive move which broke this two structure and also this structure. Okay, so it's actually a good breakout structure, good minor breakout structure, which can indicate a good POI. Okay, so this will be our POI. Now I'm gonna, yes, gonna exit this thing. So there you can see, so this was the POI which we marked. Okay, and this was the refined POI. Where will be the next, exit will be on the next breakout structure or POI, or on the next order block. Okay, so I am thinking that this will be our order block, which you can actually identify really easy by, because this is the breakout structure. So this will be the order block. Okay, so for marking the breakout structure, we need to go to 1 day time frame. Okay, to the original time frame which from where we started. Okay, so that will not be our yeah, that can be our high. Okay, so this will, because from this breakout structure, this is where the market reversed. Okay, so this can be our target. Moving on to 1 hour time frame. So for a riskier entry, okay, for a riskier entry and also for higher risk reward ratio, I can actually enter on this candle. Okay, enter this or any one of these. Okay, then place my stop loss below the POI and target to be around here. Okay, it will give me a risk reward ratio of 1:20. So that's how you actually take a trade. Okay guys, so this is the second examples of taking an entry, and here as you can see, let me just show you. Okay, so this is shows an uptrend, and then here we got a consolidation. Okay, uptrend and then consolidation for a ranging market, and then it broke to the downside. Okay, and that same impulsive move broke to the upside. Okay, so here I will have my first POI, but here I, here I have marked my POI. Okay, on this candle, and this will be my breakout structure. Also, this will be my breakout structure. I'm deleting this for a minute. So as you can see, the market didn't came to my POI. Okay, but here we can actually see a what do you say, pin bar candle, which we can actually take an entry, but that's not how we took entry. We actually went to the lower time frame. I think I went to 1 minute time frame for this. We went to 1 minute time frame, and this was our order block POI. As soon as market made an engulfing candle around here, I actually took an entry. Okay, so this is where I took entry, but this is actually a riskier entry, and I did it because I thought that the market was going to reverse from there. But that's not how you should take an entry. You should wait for a breakout structure, minor breakout structure, then take an entry on the POI. Okay, so market reversed and then again waited here, give a minor breakout structure here. Okay, so this will be our POI. Again the market break structure, so this same POI will be marking here, or if we are considering this to be a POI, we can actually mark this whole candle also. Anyways, the same POI, and then we'll be taking an entry over here. Okay, second entry. So this this will be a much more safer entry. For the stop loss, so let's see, I'm gonna place my buy order on here. Imagine if I place my buy order here, but in actual I place my buy order on here, and if I place my buy order, and if let me just go to maybe 1 hour time frame. My target would be target would be not this, the tip of this candle didn't have any breakout structure, but I feel like not feel like because this is the recent high. Okay, this was the high and then it came around here, so I'm gonna be place my target on this high, and for a safer trade I can actually put my stop loss below the original POI. Okay, and then my target being around here. So this will give me a risk reward ratio of 1 is to 5.63 something, which is not good. Okay, sorry, which is good, which is better. Okay, which is good but not better. Okay, so for a better entry or for a much lesser risk reward ratio, you can actually place the entry below one of the POIs. Okay, so below the recent POI, so I could be good. So this will give you a risk reward ratio of 1 to 35. So that's how you take an entry. Okay, so one more trade I will be focusing on, then series will be entry and exit will be. Okay, the exit price, I actually took some partials around here. Okay, the partial was on this breakout structure. Okay, so this candle, okay, so this candle was the structure, was the impulsive candle which broke this structure, and this is the high of the this candle. Okay, so I took partials around this candle. Now by partials, what I mean is that if I take around 10 quantity, will be exiting 5 quantities around here, or if I'm really confident with my trade, I'll be entering a little bit, okay, maybe 2 or 3 quantities, and then we'll be writing the rest. Okay, so another trade which I took was on Apollo Hospital. Let's see. Okay, so the stock was actually bullish, then it broke structure around here. The symbols we move broke structure. I chose okay, so there was a minor break of structure here also, so I chose this as my order block. Okay, now some of you might be wondering why I did not take this thing as my order block. Okay, so it's because when the institutions see this, would they be entering here or here? Okay, which is the much more discounted price. So if I am taking this level, is 4765 a good price to buy, or is 4673 a good price to buy? Okay, so definitely they will also be thinking like this. Okay, now if you have an order block around here, which is okay. Okay, sometimes market may come around here and then reverse. Okay, so sometimes the market may come around here and it may reverse. But whatever that may be, we are not blindly entering, we are actually looking for a minor breakout structure. Okay, so I saw that there was no minor breakout structure around here. Actually I did mark an OB around here, or sorry, a POI around here, and I didn't saw any you know what minor breakout structure around here. Okay, so I deleted this POI, and then here on this POI it actually reacted. Okay, and it reacted really violently. So if I'm going to 5 minute, okay, if I'm going to 5 minute, I can actually see that the market came around here, broke this first structure, and then again it broke another structure. So the last candle which broke structure was this candle. So if I read this, you might actually see. Okay, so this was the last bearish candle before the bullish impulse, and then that would be my POI. Okay, now when the market hit my POI, so this was actually a paper trade because I am actually trading for my client, and so for me I only took paper trades because I don't have enough capital. I have capital, but still I actually trade for him because he has much more capital. I actually make a lot of money on his commission rather than me trading. Okay, so when the market came over here, I actually bought a futures and then sold the put options. So I bought put options. That's how I traded using a hedged strategy. But still, okay, you can actually place a limit order if you are trading equity. Okay, whatever that may be. So you can actually place an entry over here, and then the exit will be on the 1 hour time frame. The exit will be the high. Okay, recent high. This will be my exit. And I would get the risk reward ratio of 1:27. Okay, which is a decent risk reward ratio, not decent, awesome risk reward ratio to be exact. Okay, so while trading like this, you might actually come across risk reward ratio like 1:5, 1:10, 1:20, and the good thing about is that even if you lose 10 trades, if you have a 1:15 trade or 1:20 trade, even if you win at least one trade, you will actually recover your whole profit. Okay, so that's the benefit of trading institution. Thank you.